Today I want to show you how you can trade a range, and I will base it on an example of a trade which I did last week. Please note, this is not financial advice, it's just my way of thinking, and the video is for educational purposes only. Alright, so in front of you, you can see a Bitcoin chart. On the right hand side, you can see the trade, which I did. I entered at this price and I fully took profit on the price on the right hand side, and this was a short. So I was basically short selling with the idea of price going lower and earning on the downward price action. Now, before we go to the trade, let's see what is happening on the chart. So as you can see, from around 21st of June, we are in a range. You can easily mark this range by marking the low of the range and the high of the range. And as you can see, what price is doing is fluctuating in this range. Now we are also in a replay mode. So the last candle which you can see here is from 6th of July, and I'm using this replay mode because I think it would be easier for everyone to follow my way of thinking, and it might be also more engaging. All right. So what you see in front of you is a candlestick chart. That's just super brief basic info. If a candle is green, it means that it closed above the opening price of this candle. So it's an upward candle. If a candle is red, it means that it closed below the open of this candle. And the wicks show you how far price has gone in a given candle. In this case, each candle represents 1 hour of price action. But right now, let's move to 15-minute time frame, as I believe that it would be better, it would be easier to see what is happening. All right. So here I'm in front of my computer, and I see quite a large increase in price. And as you can see, the volume here is really large. It's significantly higher than the prior candles, which show you that buyers are in control and basically that they are pushing price higher. Sellers are kind of scared at the moment. And why I'm here talking about volume? Well, if you read the research from Richard Wyckoff or Harold Gartley, those who are pioneers of technical analysis, who were doing who were trading 100 years ago, they were looking at volume as leading indicator. And I believe that after you watch this video, you will see why. Okay, so let's play the chart a little bit. So we have here the next candle. As you remember, I was trading the range. So let me show you one time again on this higher time frame. So my entry price was 31,350, and what I was looking for is basically a sweep of the highs. So price goes higher than the current yearly till date high. Then it rejects, so it goes under. And what I'm aiming to get is basically a move to the middle of the range or to the bottom of the range. And that's how I want to earn money on this move. All right, so let's go back to the 15-minute candle. Now, as you can see in this candle, it closed red. So it means that basically it moved here, then some big sellers, heavy sellers like market makers, maybe large institutions came in, and finally sellers stepped in and they pushed the price down on a very large volume, as you can see. And for me, this price action, so getting this big wick, sweeping the highs, and then getting these massive rejections on such a heavy volume is like a confirmation that I can enter a short trade here, and that basically sellers woke up and they potentially might be now in control. So let's see what happens next. Some people will enter here, some people will enter here. I like to wait for the 15-minute candle to close, because as in poker, you really want to see what the vast majority of players did during the betting phase, and I also like to get more information to be more confident about the outcome. Now, before we go further, what I also want to show you is risk management, because in trading, it's there is no point in winning a large amount of money and then losing everything in the next trade. So what you really want to do is have a risk management. You want to preserve capital and earn on a consistent basis. And in trading, what we have is basically a stop loss. So here, look at this example. So I entered around here in this case at this 31,350, and I would put the stop above the wick. So I saw, where the buyers were able to push the price higher. I also saw how sellers stepped in and pushed the price lower on a heavy volume, which is for me a confirmation that sellers might be now in control. So I'm putting my stop loss above it because I believe that the price won't go there. But if my thesis will be invalidated, if I'm wrong, then I will take the loss. So if the price goes above this wick to this level, my trade would be closed and I will lose X amount of money, which I can also choose by myself, and I will show you how. So what I'm aiming in this trade is basically the range lows, which are here. So if this trade would play out, you can see it's like an 11 risk to reward. So for example, if I will risk $100 here, so if my stop loss will be hit, I will lose $100, I can earn $1,100. All right, so let's come here slightly closer to the chart so that we can see the volume, and let's play what happened next. Ideally, the initial reaction is very nice. So let's see if the sellers are really in control, or if maybe the buyers will regain the control and will push the price higher. So let's see. Okay. So here what you can see, and then the next two candles also have those wick to the upward to the higher places. And what it shows you is that basically it would be even better seen on 5-minute chart, is that buyers are trying to push the price higher, but big sellers are saying no, we will distribute and we will push the price down, because we probably, the large institutions or the large players accumulated Bitcoin or lower prices, and now they want to sell it with a profit. And unfortunately, there would be players here, most likely retail players, who think that, oh, we are so high, we are at the range high, so now we will go to the moon, 5,000 more, 10,000 more. And unfortunately, if they are buying here, of course, there is a possibility of a breakout to the upward. But for this, you need to see high volume, and the current price action shows you exactly that sellers are pushing the price down. They are distributing their Bitcoin, and then we have let's jump on the 15-minute chart again. And then we have this big candle down, also on a large volume. So this is this is like in poker, you can say that it's the next card which came to the table, and the next card is showing you that the price is moving down on a heavy volume, not as big as those two impulsive volumes, but significantly larger than the prior candles. So for me, that's like a next confirmation that sellers are in control. Usually, at some point you would expect a reaction, and so the reaction would go higher, and based on the volume on the reaction, and also how far the reaction will go, you can then try to kind of predict what can happen next. So let's play the chart. Okay. Yes. Yeah, let's stop here. Okay, so here I can use this Fibonacci tool to check how far the price the reaction has went. And as you can see, so from the top to the bottom, and then to this place, the reaction is 50%. So the price moved down, and then the 50% of this downward price movement got retraced. And based on the research from Wyckoff, that's kind of like a normal reaction, retracement. So now let's see what's happening on volume. Who is in control here? So you can see that on this upward movement, where ideally buyers should step in, the volume is really low. So you really there are not many buyers who basically are buying at those prices, and then there are again you have those weeks, so sellers are liking these prices to sell, to distribute even more. They are pushing the price again down, and because there is so little volume on these upward candles, there is very little momentum, and so I think you can expect the price to go further down. So you entered your short, here you entered, you see that the price is coming close to your entry, so you can get slightly scared, although trading should be without any emotions. But then as you can see that the volume is so low on this on these green candles, you should be kind of confident that it's more probable, because trading is about probabilities, so it's more probable that the price will move down to some extent than it will break higher. And let's see what happens next.